So today we're going to be talking about two different trading methods that most people normally ask for in my videos. And this is going to be crypto trading and crypto arbitrage trading. So we're basically going to be talking about these two things. We're going to know which is better. So anytime I talk about crypto trading for the course of this video, I'm simply talking about spot trading or futures trading. And whenever I'm talking about arbitrage trading, I'm simply talking about the strategy of buying an asset at a cheap price and selling it at a higher price. That's basically selling selling an asset that has price discrepancy, buying and selling of that asset, right? So this is basically what we're going to be focusing on in this video. And what I aim to achieve by the end of this content is to teach you the better option depending on what your goal is. If your goal is to make more money fast or to make a stable income over a period of time, and also hopefully give you a safe and stable way of actually pursuing these things, okay? So that's basically what we aim to achieve in this content, and you can actually do this with any platform that is accepting whether crypto trading or crypto arbitrage trading. So without wasting much of your time, let's go ahead and get the content going. And don't forget to go ahead and hit on that subscribe button right below this video. It helps the channel grow, and it also helps encourage us to create more content that is going to help you quite a lot. And it also helps us as well be able to meet those individuals with very profitable platforms that can actually help you yourself. Okay, so go ahead and subscribe to the channel. It's completely free of charge. Okay, so go ahead and do that, and we'll get the content going right away. All right. So welcome back to the video, guys. So what we're going to be doing right now is to start with crypto trading. But briefly, let me explain what crypto trading and crypto arbitrage is. So crypto trading is basically what the name is all about. Whether futures or spot trading, okay. So it's all about trading an asset. And let's say, for example, you want to talk about the spot trading method. Now, spot trading is basically like you exchanging your finance for something. For, let's say, you go to the market, or you go to a share vendor, and you give the share vendor your money. The share vendor takes your money and gives you a percentage of a particular share, right? Now, if that share you are holding rises in price, if the asset of that particular share goes up, you'll be able to exchange that share back. Those shares the vendor gave you, you'll be able to exchange it back at a higher price. So let's say, for example, you went to the share vendor and you give the share vendor $100,000, right? For the person to be able to give you, let's say, 2% of a particular company's share. And then after a while, after like 2 years or 3 years, the 2% share you bought $100,000 is now worth $700,000, right? That's dollars. Now this means that if you go back to that vendor and say, hey, Mr. Vendor, I want to sell back these shares I bought from you 3 years ago, instead of the vendor giving you $100,000, the vendor will now give you $700,000. That's basically what crypto trading is all about, especially spot trading. It's actually the same thing with futures trading, it's just that they have a little bit of principles guiding them. Now, let's say you're talking about arbitrage trading. Arbitrage trading is a very simple analogy. It's very simple to understand when you're talking about it theoretically. But what about when you're doing it practically? Well, that's actually where the problem is. But hopefully, we're going to be covering that in this content, right? So arbitrage trading goes like this. Let's say you go to market A and you have one BTC selling at the price of, let's say, $73,000, right? And then in market B, that same one Bitcoin, it's selling at the price of $74,000. Now, $74,000 minus $73,000 is giving you an additional $1,000. Now, this basically means that if you actually buy BTC in market A and sell it in market B, you're making $1,000. At the same time, depending on the arbitrage you're doing, you also have to account for the gas fees. When I talk about gas fees, I like to use fuel or petrol or gasoline, depending on how you call it or know about it in your country or region. So the amount of fuel or petrol that you spent while driving to the market, that's basically me trying to describe the gas fees for you. Okay, so you have to account for that. And if your through and fro is actually, if your through and fro is actually still within the profit that you will make after all those expenses. So let's say, for example, your through and fro to these two markets is about $500 total you spent, right? And you made $1,000. That means you have extra $500. That means you made a profit, right? But if at the end of the day, the amount of gas you spent has become, let's say, $1,100 or $1,001. That means instead of making money, you lost $1 at the end of the day. Or if it's $1,100, that's instead of making money, you lost $100 at the end of the day. So that's not a reasonable arbitrage. So that's basically what arbitrage trading is all about. Okay, so don't misconstrue any of this, right? Crypto trading is very different from crypto arbitrage trading. Now, quickly, all you have to do when you want to do cryptocurrency trading is go to any cryptocurrency exchange you are using. I'm not going to promote anyone in this content. Any particular platform you want to use is perfectly fine and very doable. Okay, go over there, and one of the best practices actually you can deal with in crypto trading is to trade the spot trading. That is the safest. Now, if you're looking to make a lot of money, then spot trading might not be for you, right? Unless you know exactly what you're doing and you are actually using a really, really huge amount of money. So let's say, for example, if what you have is a capital of $100 and you want to trade spot trading, hoping to cash out big over a short period of time, as a matter of fact, over a long period of time with $100, you are likely gonna quickly realize that that is not possible. That is not gonna work, right? Because $100 margin, it's not a huge amount of money. But if you, let's say you have up to $100,000 and you really know what you are doing, you really know how to read when the market is going or is about to go up or down, then I think spot trading is good enough, right? If you decide to actually put in the whole $100,000 in a particular trade, because then if it goes 2% up, that means you're making $2,000 in just one day. And I mean, that is actually a good amount of money considering how much people make in a month, right? So that's it. Okay. So if what you're looking for is a stable income or a stable way of making money, all you need to do is to go learn the candlestick patterns, learn the market, the trends. Of course, you will not always get it right, which is why I advise people to always divide your funds, your trading capital into, let's say, 30, 30, 40, right? 30, 30 at the beginning and 40 at the end as the last trade. But please do make sure to know exactly what you're doing. Crypto trading is very risky and it can be very volatile. Okay, you might not really know what is going to happen before it happens. But if you really have studied the market and you know where the points of interest are and you're trading spots, then you don't really have to worry about the big banks or all those hefty weeks closing you out or anything like that. But you just have to worry about the amount of money you're willing to put into the market, right? Because if you enter a wrong trade or you don't really know how to read it properly, spot market is that market that is capable of tying down your assets. And yes, I mean it. I said tying down. It doesn't mean you've lost the money. It's just that you have the asset, but it's not worth the amount you put in. So you cannot sell it at a reasonable price to be able to regain back your money 100%. It's still there. I mean, in the future, if it comes back to that price, you can be able to sell it at that price and still make your money back 100%. But it ties it down because, I mean, it's not there yet. So one of the best coin I will advise you to trade when you're trading spot trading is BTC or ETH or BNB. I mean, these coins that have proven that they eventually will keep on scaling, right? Even if the price of BTC drops down to $20,000 today, there's still a very good chance of it going back to $100,000 within a year. But of course, you're not trading to trade within a year, so please make sure to divide your money into waves. Okay. Now, if you say you want to trade futures trading, futures trading is also something you can also do. It's a very nice trading for people who have the heart and don't have the capital to trade. Now, when you go to futures trading, one quick thing you're going to notice is that you can actually lose your money. I mean, your money can actually get vanished. You won't be able to see it again if you enter the wrong trade and you get liquidated. But then, of course, you can use what we call margin to trade. So when you're trading with margin, you can actually, let's say what you have is total of $100, you can take 10x, right? 10 times 100 is what? 1,000. Let me see, you suddenly have $1,000 to trade. So giving you a stronger margin or a bigger amount of margin to be able to make money in the market. Now quickly, let's go to the arbitrage side of this whole thing. Okay, if you guys want me to go in depth on this futures trading, you can leave the comment in the comment section. I can actually go ahead and give you a proper in-depth. The reason I'm not going in-depth in this content is because personally, I don't like to advise especially beginners to go into futures trading. I like to tell them to go spot trading, learn the market, and then transition into futures trading if you really want to do futures trading, so you do not lose the money and cry wolf. Okay. All right, so quickly, let's go to the arbitrage side of this content, right? So the thing is that arbitrage trading is not something you can do using your desktop version for Bybit. Or I don't know about other platforms, but Bybit itself, you cannot use desktop version for it to do arbitrage trading. But of course, I have the document open, so I'll be able to talk about the arbitrage trading in this content. So they have two types of arbitrage trading in Bybit. Now, this is the safe method I'm teaching you. There is a more risky method that you can do arbitrage trading in, and it is way more profitable than this, right? But it is riskier. So for this content, we're going to be focusing on the safe method. We're going to be sticking here in Bybit and talk about the safe method right here. So please, if you're a person who is looking for the risky method, this video is not for you. Okay, we're talking about the safe method here. So we have the funding rate and we have the spread arbitrage. Now, quickly, the reason why I came here first is because I want to show you something in this futures market. Now, if you look at this particular spot over here, there is something called funding rate. And if you look closely beside it, there's something called countdown. And if you go ahead and take a proper look under it, there's something over here that you can see. We have the percentage and we have the countdown. And in brackets over there, we have 8 hours. What that is basically telling us is that the percentage of funding rate that is going to be going to some people at the end of 8 hours. And this particular 8 hours for this batch is ending in 6, which is now 5 minutes, in less than 6 minutes. Okay. Now the percentage going to whoever it is going to is actually 0.0053. Of course, it's not much. I mean, what is 0.0053? But let's see what you have in the market is $100,000. I mean, do the math. It's still not too much, but 0.0053 times $100,000 times 8 hours, and 8 hours in 24 hours, right? So if you do 2 times of 8 hours is 16 hours, right? And add another 8 hours on top of that. So that's basically 3 times. You receive 0.0053% money 3 times a day. That is guaranteed. Now, some of you might ask, okay, so how does this funding rate work? Honestly, I'm not really here to explain this to you, but I will give you a brief explanation on this so you do not get lost or confused. So quickly, here's how it works. Okay, so let's say over here we have sellers and we have buyers. So let's say the price of this particular market, you see, is constantly trying to match what it is in the spot market. They're trying to match each other. They don't want to oversell or overbuy so that the market will not throw off balance and everything will scatter or will destroy or something like that. Okay. So they're trying to match these things. Okay. So this is basically encourage. This what you're seeing over here is an encouragement money. I think it's going to be better for you to understand like that way. Okay. It's encouragement money. So when the price of, in this case, BTC is pushing above the set price that we're using spot trading to target along right now for you to understand the whole thing. Okay. So let's say the price is pushing above it. Okay. And that means people are buying more of BTC and sellers are not really strong at selling. Now, this is where this guy comes in. Funding rates. He comes in and what he's doing is that he's rewarding the sellers, right? Because the buyers are buying, he's taking money from the buyers and he's giving it to the sellers. He's trying to tell the sellers, okay, we're supporting you right now. Go ahead and continue staying here. And the buyers, if you want to earn this money, go back to the sellers so that we'll be able to give you some of this money as well, right? And they are doing this so that they'll be able to balance this whole thing, so that the price will be able to go in uniform with the global price. So it doesn't throw off guard, it doesn't destroy the market in any way. And surprisingly, it works. I don't really know who brought this idea, but it works. Okay. So this whole thing, you see, they are taking money from the buyers, giving to the sellers. And if the market is pushing down and it's trying to push below the global limit or stuff like that, they will start taking money from the sellers and giving it to the buyers, trying to tell the sellers to stop selling. Hey, stop selling. Go back to the buyers if you want to make some of this money as well. So that's basically what this funding rate is all about. That's the simplest explanation anybody can give you about that. Okay. Now, basically, all you have to do is to go to the bybit. In this case, bybit actually, you can use other platforms. Okay. But in this case, bybit, and go to the funding rate arbitrage. I cannot show you this thing because if I go to this arbitrage section in Bybit, it's going to tell me that I'm not able to do arbitrage using the desktop version of this. Okay, so the arbitrage section is somewhere down here. I might have missed it. Yeah, it's somewhere down here. So if you take a proper look at it over here, you can be able to find arbitrage right there. So let's click on this arbitrage and let's click on create. It says arbitrage is currently not supported on the web platform. Okay, so I have to use the application, but in this case we're using web platform to do this content, so we cannot go to the application right now. Okay, so that's basically how to go to the arbitrage section, and you can create for funding rates or you can create for spread. Spread is it's a very simple arbitrage as well. It has a bot basically. This is actually a brief explanation of what the spread is, right? You can go ahead and read this, and it's basically going to be giving you arbitrage. It says over here you can use arbitrage tool to execute a spread arbitrage by buying and selling the same asset at different markets. So just like what I explained earlier in these futures markets. So basically what this thing is doing right now is that it will use your money, it will buy and it will sell, right? So it's basically it's more of a complex explanation actually, if I'm to tell you the honest truth. It's more of a complex mathematics this particular bot you see is doing right here, but it works as well. Surprisingly, again, I mean, who thinks of this? Okay, so basically what it's doing, right, is that it allows you, or let's say you create the bot. Let's say you're using $10,000 for this. Okay, $5,000 going to the spot, $5,000 going to the futures, right? Now let's say magically BTC is worth $5,000. Magically, okay? This is not real. This is not current right now, okay? Now it goes ahead and it buys BTC with $5,000 in the futures, and it converts your it sells it goes short for BTC with $5,000 in futures, and it converts your money in spot market to BTC. So basically it means that it is selling BTC in futures, it's buying BTC in spot market, right? So every single time it's doing this, it is always buying in spot market. It cannot sell in spot market. It's always buying in spot market. Okay. Now, if the price of the BTC goes high, and you know that the price of these two things are not always equal, they are not always equal. If you check two of them right now, they are never equal. They are trying to catch up with each other. So once it does this particular thing, I'm telling you, there comes a situation whereby the price of BTC is going up in, let's say, X and Y direction, right? Or X and Z direction. So let's just use Z direction to be the negative and the Y direction to be the positive. So let's say the price of BTC is going into the Y direction in the futures market, right? Now, when this happens, that means you are increasing in price in the you are increasing in price in spot, because remember it will also follow it along. But most of the time, it is always the spot market is always more expensive than the futures market sometimes, but sometimes they also interchange as well, right? Now, when this happens, that means you are losing money in the futures, but you're making money in the spot. Now, in all this, right, going through some weird calculations, which I'm not really going to be talking about in this content, there's actually a tiny amount of margin that is actually going to be coming out from this. Because if you remember what I've been hammering again here in this content is that the prices are not always equal between the spot and the futures, right? That is basically it. So the prices are not always equal, right? So it uses this tiny glitch. Let me just call it a glitch. It's just this tiny glitch to chip out a tiny amount of percentage of money from the entire market and give it to you as a reward. Now, of course, this is not something you expect to make a lot of money from if you're actually doing it, but it is more safe of an arbitrage. It is more stable, and you can actually make money from it over a long period of time. Now, before we close this content, let me show you guys something. You can see that the countdown for this is over and the funding rate has refreshed. Now, what you see here is very okay. It's very common. Now, this is starting at 0.0014%. Now, as time goes on, it can increase. Okay, it depends on if these guys have started responding positively to what the market actually wants. So I think currently right now, I think the funding rate is going to the buyers. It should be going to the buyers right now. So I think those are the ones that are currently expecting this funding rate, right? Let's see. Yeah. Open interest, turnover, low, high. Yeah, I think this funding rate should be going to the buyers if you ask me personally. But when you are using the port, you don't have to worry about buyers or sellers. The bot is always putting you in the position to make the money. So you don't have to worry about that at all. Okay. So this is basically the safest practice you can go for arbitrage trading, and for crypto trading, the safest practice you can go for is spot market. And like I said, try and stick with Binance, Bybit, with BTC, BNB, and ETH. Try and stick with those ones, okay? But if you decide to go for other ones, I mean, it's a little bit more riskier. I mean, a coin you don't really know much about, but I mean, it's up to you. So just do make sure you understand the risk involved and do plan yourself properly before you engage, okay? Don't forget to subscribe to the channel, and I will see you in the next one. Take care.